Hey, this is Scott Cole from bestdaytradingstocks.com and besttipsfortrading.com, and I just wanted to provide a brief commentary on today's market action. We had one of those days where we started basically at the low and traded higher all day and ended up at the highs for the day, and we call this a runner day. And I think it's significant in that this is generally how a new, at least intermediate term move will start in the stock market. What we'll need to see over the next week is a confirmation day that provides similar price action. But this is the S&P 500, and that was the low yesterday, about 11:21. There's the low of August 9th at 11:01. Low closes back then were about 11:20, and we closed just above that level yesterday, and we had a relatively narrow trading range yesterday, comparably speaking to the last few trading days. So today just kind of got off to a good start and kept going and never really looked back. So good day for the bulls, and all of the market averages, all the major averages were up 3% or better. The Dow was up just under 3%, but everything else was up over 3%. The S&P was up 3.4. We'll look at the NASDAQ. NASDAQ was up over 4, and I believe the Russell was up strongly as well. That was up almost 5% today. Real nice move there. Now, the only thing that concerns me here is that if this is truly going to turn into a new market move to the upside, a real significant move, we definitely have to clear this first hurdle on the Russell here at about 719. The S&P is going to have to clear this 1210 level. And the Dow is going to have to clear about 11,530, and it's going to have to, all these averages are going to have to make a significant move above that and close above those levels. That would confirm this double bottom pattern that we see. Otherwise, what could happen is if we do fall short of this level on all of those and then start heading back down, what you could end up seeing is a triangle formation, and it's a relatively large triangle due to the volatility, but triangles tend to be continuation patterns, and the only reason why I would hesitate to call this one a potential continuation pattern is due to the volatility that has been transpiring during the pattern. Usually when I see that, when there's wide swings, then it's not nearly as reliable a pattern. If it were a tighter triangle, if it ever got formed, then I would definitely be more concerned. So it looks to me like we definitely are going to get ready to test the upside again of the recent trading range. The Dow should be on its way up to about 11,500. And really the only thing that can keep us from moving on up is Europe. Europe has been the one area that's causing us issues, and or if we get some weak employment data again. But the stock market's been kind of ignoring that U.S. economic data, it seems like, for the most part. This downtrend has been really due to the European issues, and if they get their act together, then we'll be in better shape here. But at the moment, the argument is stocks are cheap. Treasury yields are so low that you got to find some yield in stocks, dividend-paying stocks, and the risk on trade was on today, and this was confirmed by gold selling off. So we'll see what happens. I like the price action. If in the next 4 to 7 trading days we get another move similar to this, then you can pretty much get the all clear sign and start buying a little bit more heavily. For day traders, for now you pretty much have to have a little bit of a bias to the upside for the next day or two probably, and then we'll see what happens from there. But today's price action suggests you want to be a little bit more biased to the long side.